Good evening, everybody, and welcome to Live Market Analysis for another week. I hope it was a productive week for you. Certainly, we've had some pretty good moves in markets, but it's one thing to get some good moves. It's another thing to convert on them. And sometimes, as good as the markets are, we just miss out, don't we? Hopefully, that's not you, and hopefully we can find you a bunch of great trading ideas. But it is important to remember with all of these trading ideas, they're all general advice. They have not taken into account your personal financial circumstances, objectives, or particular needs. So before acting upon any of these very general ideas, you should consider them carefully. Consider your objectives, financial situation and needs, and take all reasonable steps to fully understand the possible outcomes of any trades and strategies that can be employed. It is recommended you seek independent financial advice to ensure that any information provided here is suited to your financial situation requirements. Trading and investing is risky. You will inevitably endure losses at some stage. The bottom line is you trade, you're going to lose at some time. Ultimately, it's you and not I who's responsible for everything you do. With the disclaimer out of the way, it is now over to you. Let's get your questions answered. Anything from the world of anything really is fair game. I do need to get rid of that fundamental analysis reader, don't I? But it is all good fun. Let us head over to the AMI broker screen. And I do have, look, I'm in the process of getting the database issue sorted out with Norgate, and the fact that Market Index is paying for ASX data, which is great. I don't have to pay for that, but they're not going to pay for US data for obvious reasons. They've got no interest in it. I've got to pay for that. So I've got two accounts going, and switching between them I thought was possible. It's clearly not. What I'm going to do is tack on a US subscription, probably to the Market Index subscription, and woolly-dilly for them, they will get the benefit of that also, but it means we'll be able to operate solely in AMI broker. Look, until I get around to doing that, I'll just continue with switching between this and the trading view, which is perfectly adequate, and I'm getting better, to be fair, at drawing stuff in it. I do think I want to have the Norgate data because that allows us in these sessions, if we get some downtime, let's say I've answered everybody's questions, to actually do some scans and run some scans and go through some lists and do some case studies and things like that. So I do think it's important we have it. On that note, the Buy Me a Coffee website is back up and running. I'm not sure if I have that, but I can certainly find it. So pretty simple stuff. Buy Me a Coffee, and then it's / Carl Capolingua, and all proceeds are going to just me paying for data. Once I've covered the costs of US TradingView, the webinar software, and maybe even Australia, just to keep it all in my name, then I'll suspend this. And thank you to everybody who have very generously contributed by buying me a coffee, and some people have gone way above. Preferably, look, it's wonderful. You don't have to go over, please. There's a reason why I just made it $25, is because I want everybody to contribute a little bit rather than just a few people contributing a lot, because I do want this to be a community effort. But that is all back up and running again. As I said, we're going to head over here. We're going to maybe just do a quick whip around the grounds, starting off with the NASDAQ. Last time we looked at it, it was literally this candle here. Let me zoom in. And we said, look, probably, because I don't know what's going to happen next. Probably we're back in the uptrend, right? We've got some nice candles here, and here, and even this shadow there, I said, was still very good, and probably we're going to go up. We're going to have a couple of pullback days, nothing really too sinister at all, and then we are heading back up, which is wonderful, with some really nice candles, culminating in Friday's amazing close. There's nothing in that chart, famous last words, there's nothing in that chart which tells me that this trend cannot continue. It is a picture of excess demand. It almost doesn't get any better than that. But again, I don't know what's going to happen next. If you know what's going to happen next, then I'm going to flip over control of the webinar to you, and I'll just listen quite happily. The supply could be there tonight. We don't know. The good news is we know how, whilst we might not know when the supply is going to manifest itself, we know how the supply will manifest itself. And we know it'll look something probably like this. Look over here, like that candle there. You might even get a little bit of an indecision candle there. I hate it when these lines are dotted on my arrows. I'm going to change those. And you might, let's change the colour as well. We're going to get a red. And just one little peak does not a reversal make. We know we want to see a follow-up like that. like a little gap and run and low close beneath the middle trough, like that candle there closing beneath that trough. This is a perfect little turnaround here, a manifestation of supply. And until we see it up here, well, really, X marks the spot. Anywhere up there, there's nothing really to worry about. So reiterating, we don't know when it's come, but we know how it'll come. That's the important part of it. Let us have a look at some of these key indices. So much talk in the media. Oh, I love the media. They know exactly what they're talking about, don't they? All the time. And they're all talking about the S&P 500 index and how it's making a record high. Oh, it's overbought and all that. You know, overbought is just such a load of rubbish. If something's how can something be overbought? There's just lots of demand and not much supply. The equal weight index, which I must admit I can't get on here, doesn't look as good as that. But I can show you what the equal weight index does look like, because it looks very similar to the Russell. And we are seeing lower peaks and lower troughs in the Russell. And we know we like to look at this one because it's that heartbeat of corporate America, isn't it? And yes, we can see that broader than those big S&P 500 stocks, broader than the Magnificent Seven, they're calling them. Hopefully we'll look at those charts tonight. In fact, I'll make a point to look at them tonight. Outside of that, yes, some that's probably understating it. Many stocks are still struggling out there in corporate America. Lower peaks, lower troughs. But hey, we did have a decent Friday, and hopefully we can swing back to higher peaks and higher troughs. And if the Russell 2000 gets going, I haven't done this, but I'm really curious. I'll look at the weekly chart. Well, that's pretty useless, too much stuff there. Let's go to a different one where there's no lines. I'm curious. What does the Russell look like in the weekly chart? Okay, I see now. Because if we can, actually, that's not too bad. That last week's candle was actually pretty good. Obviously, nice rally, relatively shallow pullback, hitting into those short and long-term dynamic trend zones, and they work on the weekly chart. If we can push back up, actually, and break those highs, the Russell's starting to look pretty good, and then we will be in bona fide bull market territory, because the NASDAQ and the S&P 500 will be going bananas, and finally the Russell will join in. And when you get moves like this, that's when you're really in a proper bull market. So that's all very encouraging if you look a bit further out. But we're not quite there on the short-term stuff. Very interesting to see European charts, and that is a weekly chart. But on the daily, they're looking a bit average, aren't they? So it's not just it's not like this unanimous move on global equity markets. Remember, equities are just risk. Equities are the epitome of risk. Everyone's, oh no, not my shares, Carl. My shares are safe. They're all blue chip. Rubbish, mate. They're all risk. All your shares are risk. You know what's safe? In theory, bonds. But 2021 and 2022 kind of blew that out of the water, wasn't it? Or was it 22 and 23? But not, this unanimous vote of confidence here. We know the Nikkei is doing very, very well. Hey, that's certainly magic. Look at that. What a wonderful chart that is. Absolutely magic. If you're trading CFDs, some of you may still be trading with CFDs. You can look at that. Or we do have the IJP, if I'm not mistaken, which is an ETF. I know there's lots of letters flying around on the ASX, which you can also trade. Nifty 50, that did pull back. We thought that looked good last week. But the Shanghai Stock Exchange, they wiped out today. I didn't see that. Look at that. That is wiped out. So we saw, was it Thursday? Thursday with this candle here. This is fascinating stuff. So this candle here, I might even try to go into we want to do this. So this is the Shanghai Composite. Oh, wow. Okay, so let's look at the hourly chart. Now, no, I don't normally go to hourly charts, but this is fascinating stuff, because you think you know how markets work until you see how Chinese markets work. And of course it was meltdown. It was complete catastrophe, breaking through all support, total supply, no demand, Chinese share market, and then by extension the Chinese economy is in the toilet after the data dump we got last week. The data dump, of course, is we had industrial production, unemployment rate, retail sales, GDP. Most of them were worse than expected. GDP came in at 5.2%, lower than the 5.3% expected, but higher than the 5% target, of course. But if we're looking at consensus estimates, 2024 is about 4.5%, and 2025 is 4.4%. Now, these are Reuters consensus estimates. So we're still expecting, a significant slowdown in the Chinese economy. Anyway, we know why it's happened. You've listened to me long enough to know what's going on there. But this is 1 hour. This is a 1 hour chart here. And basically, Beijing, they made a few calls there to their buddies at all the various state-owned financial institutions. They said, you need to start buying because the stock market's in the toilet. And they did. And that's what popped it up. And then, as so often is the case, you cannot fight the market and you cannot fight the animal spirits. People's just desire to not be invested for very good reason. They're making very rational decisions, and then we wiped out today. That is a really, really terrible chart. Didn't see it in the A50 though. That's interesting, but not a positive day. And then there's the wipeout there. Mainland Realestate getting wiped out. HSMPI, gone ski. I'm sure the Hang Seng is gone as well. So that makes the Nikkei look pretty darn good, doesn't it? So that is, let's check the banking indices while we're here. Well, that's good too. There are no canaries in the mine shaft just yet in the US. In the US, looks pretty good, doesn't it? While we're here, let's check rates. And they're heading back up, which is a little bit frustrating. I think we saw somewhere between sort of 10 and 15 basis point increases depending on which jurisdiction you're in. That is, whether you're in the US or you're in Japan, they were up about 10 basis points. If you're in the UK, up there as well. If you're in Germany, these are German bunds, but we're calling them Euro 10s here, also up. And then, of course, the local Aussies were up. You can see just backing off a little there. Hey, we all know how this works. Typically, this stuff goes up, bad for stocks. Typically, when it goes down, good for stocks. So the fact that the NASDAQ, the S&P 500 aren't making record highs, and this actually was up last week, that's a pretty good sign too. Where else can we go in our search for, why? To answer that question, why? Why is this happening to me? High-grade copper. Somebody's asking me about 29 metals. I'm sure there's lots of other stuff going on there. There's, for example, the famous phrase when it comes to mining companies, marginal cost of production. Okay, so copper prices not looking great, to be honest. And if we did a count, let's say we did a count of the last 40 candles and how many were black, how many were white. And they are predominantly white, predominantly black there. And that doesn't happen by accident. Let's flick over to iron ore prices coming down. We know, actually, to be fair, January, February, seasonally, modestly strong periods of the year, but most of that rally is done, and then March seasonally not great. Uranium stocks got belted today. I'm sure none of you are surprised that the uranium price hasn't moved. No, the uranium price didn't crash. It's still up there. No worries. Yet uranium stocks get belted because that's what uranium stocks do. So we have said, maybe a little bit breaking our trend following rules, but I've said it to you a number of times. If it's had a good run and you see the first sign of a supply side candle, don't be afraid to let a little bit of your uranium position go, okay? Otherwise, you'll be pulling your hair out like today. I'm wondering what the hell happened. Natural gas, now it managed to put the kiss of death on that last week. I said it looked very good. I said probably not a good idea to trade it because every time I think it looks good, it crashes. And it did again. And my record is unblemished on that one. Crude oil's done nothing. Thermal coal is heading down. So we know some of those thermal coal stocks are actually heading up for whatever reason. I wouldn't have a clue. But thermal coal prices look pretty much well entrenched there in their long-term downtrend, and the short-term downtrend now breaking down as well after a small period of consolidation. We could look at some of the softs and things, but I don't think we need to. I think that's a pretty decent whip around the ground, and with that in mind, let us head back over here from where we got sidetracked, and I want to do a couple of requests that have come in offline first, just to get them out of the way, and Craig has asked about 29 metals, so let's do that now. And I'm going to head over to my master list over here, type in 29, should get me there, and let's go zoom. Normal zoom, it's always important when you do your analysis to start off with what I call your default zoom. Now, I can't remember how many bars I've defaulted this to, but I can tell you, let me check in my preferences. You can't see this because just the way OBS, which is the broadcasting software I'm using to create these webinars, it doesn't show you the pop-up windows. But I can assure you, on the pop-up window that I've just popped up, it says my default zoom is 375 bars. Now there's about 250-ish bars in a year, isn't it? So 375, I'll let you do the maths as to how long roughly that is, 375 bars. Or you can just count the months down the bottom. 29 metals. Well, there's no I told you so in live market analysis, okay? But there's a trend here, and it's clear. And I've taught you all how to read and follow these trends. And I think if you've been hanging in there on 29 metals, you haven't been doing a lot of what I've been teaching you. There are no redeeming features here, and I don't mean that in a nasty way. There's just no sign of just concerted, committed excess demand. That is, I've got cash, and I'm thinking about the world of opportunity, and we just went around the world. Like, I could invest in some stocks in the Nikkei right now, which are going gangbusters, or I could invest in 29 metals. So think about what it means when we get a chart like this and we're not seeing that demand. The demand doesn't want to be there because there are 1,000 million squared things better to buy than 29 metals on a risk-adjusted return basis. Really important words, risk-adjusted return. Basically, I could get a return, but what are the risks? I might get 15% here, but if I'm risking losing 90% of my capital, how does that compare with, say, if I can get 10% on the Nikkei and only risk maybe 10% of my capital? And that's the way fund managers are thinking. So we established zero demand, and yet there are people that own the shares. I don't know how many shares are outstanding on 29 metals, 100 million, 300 million, 400 million shares. I don't know. But I can tell you a bunch of those shares want to get the hell out at pretty much any price. And they're all rational players. Demand side, they're rational. They're looking at that risk-adjusted return. Where's my best return? The supply side is doing the same, ladies and gentlemen. This is the light bulb that needs to go off in your head. The supply side, the owners of the stock are also looking for the best risk-adjusted return, and they're not seeing it here, and that's why they're getting out. Now, continue to get out until the risk part of it, by just the natural fact that the prices come down, is diminished to then justify any return that might still be left behind. And then still that risk-adjusted return that's left behind must be better than the universe of opportunity which exists. And if you think of stocks in those terms, it's bloody hard for any company to go up when you think about it, because it's competing for capital in the universe. So when stocks do go up, and if you're wondering which stocks are going up, you all know because you all look at my watch list, my daily watch list, where I tell you, here are all the stocks. This is the universe. This is your universe of opportunity, as Carl sees it. ACF, ALL. What do we notice about these charts? They're not all bottom left, top right, are they? Some of them look like this. And this stock was an absolute pile of poo-poo, wasn't it? This was the worst stock ever. And when I was doing the short lists to short stocks, the ones going down not that long ago, this was all over them. But nothing stays down forever. And I don't care. Honestly, I don't care if ASX is a good stock or a bad stock. It's irrelevant to me. All I care about is it's turning around. And other people are seeing this rank more highly. Is that the right word? Or higher? In that universe of opportunity in terms of its risk-adjusted return. And that is a wonderful looking turnaround play. AUB, I could go through them. But the point I'm trying to make here, which is a rather laboured point, is that if I go back to 29M, it don't have the right stuff. And I hope it turns around. Look, if you've got it, because I know that feeling. I know that feeling of holding this sort of junk for not just days, not just weeks, not just months, but for years, and lamenting my inability to act when I knew I should have acted. I'm totally there. I empathise with you because I can guarantee every mistake you've ever made, I've been there and I've done that, and probably to a much more substantial magnitude than you did or are doing. Let's have a look at the next one. This one's for David, Wesfarmers, which I suspect is on the good list. How did I not shortlist that today? Because I think that should have been shortlisted, and I don't recall. I did shortlist it. There you go. That's a relief. I don't recall shortlisting it, but I did shortlist it. There's nothing in this chart which tells me that the owners are just seeing all of these amazing opportunities out there in the University of Risk-Adjusted Return. And I like to leave you with one takeaway point each webinar, don't I? And today's takeaway point is the universe of risk-adjusted return. I want you to tattoo that on your forehead backwards so that when you look in the mirror each morning, you're brushing your teeth. That's right. The universe of risk-adjusted return. That's what Carl taught me that Monday night. And that is what every stock in my portfolio is facing. And while they're going gangbusters, they are mastering that universe of risk-adjusted return. And when they're 29M, they are not. This one is mastering it. I've got no complaints about this. Hey, I can't see why you wouldn't buy some more. Hey, but you do you, I'm going to do me, okay? Remember, everything you do is up to you. I don't think I need to say any more on Wesfarmers. I could talk to you about price action and that stuff, but I think it's all pretty self-explanatory. That's it for the call-in requests, the offline requests. Let me head back to you. And I have been neglecting you. Apologies. Hopefully everything's still working in terms of the technicals, the technology. I've got a lot of US stuff. Let's try and pick off some of the Aussie ones first. ALG, which McDonalds, is that ALG over there? Now you need to, you kind of need to tell me whether you're asking about an Aussie stock or US stock, because it could be either or. Some of them have overlapping codes. So I'll try and catch that actually maybe because it's here. Here. There is an ALG here, isn't there? There is an ALG. Maybe there isn't. ALG. Okay, I'm going to assume that's in the US. Adonis. EML from Michael. That one is an Australian company, and it did have a pop-up during the week. So because I have to look at the news now, because I write the evening wrap, right, for Market Index. And so I have to, well, something was up X%, interesting movers, what happened, right? And I'm going to say, I can't remember what it was, but there's an announcement there. They sold something, I'm pretty sure. Hey, who cares what they did? They went up, and it's starting to change the demand-supply dynamics in the market. How do I know? Well, we have had a bit of a seismic, bit of a tectonic shift in the price. But I still think it's too early. We talked about ASX before. We talked about how much extra stuff needs to do before we get interested. Just thought of an E stock as well, Elders. And you can see the shape of the chart there. You can see we're waiting for those trends to turn around. Now, I never get in down here, and this is the absolute total flaw in my plan, ladies and gentlemen. And if you are wondering what the flaw in my plan is, this is it. And if you already spotted it, Carl, I got you, mate. You never get in at the bottom. You always tell me to buy something after it's gone up about 30%. I'm out of here, pal. I need to find the guy that can tell me to get in at the bottom. And good luck to you. If you find him or her, then let me know, because I'll stop doing webinars and I'll just tune in. I can't do that. I don't have the capability to do it within my trading model. I need stuff to head back up to show signs that demand is coming back in, overwhelming that supply, and increasingly so. Light greens, dark greens, compression in long-term moving averages actually turning to orange, high peaks, high troughs, white candles, which gets me back to EML, and we're not seeing enough of these things yet. Okay, so yes, we could be in a situation where we look back in 3 weeks' time and say, hey, Carl, when it was at 95 cents, you looked at it for me and you said, oh, something's going on, but you said it wasn't ready yet, and now it's $1.20, and you just put it in your shortlist. So, mate, why don't you just tell me to buy it when it was 95 cents? Because there's not enough evidence here to suggest that I should buy it. And I think this candle here is still the big deal. I mean, this is the one for me, and this is a wall of supply. I should get, let's flick over here, and because I'm going to get some volume. I want to get some volume going. I'm trading blind without my volume. So this is what we're talking about here, this big black candle, and plenty of supply out on that day, but plenty of, to be fair, suckers that came in trying to buy it thinking, oh, EML's cheap all of a sudden. So what it does is the people who got in, they're deadwood, and they will want to get out at some stage, and that creates a significant amount of latent demand in the system, which we will need to contend with at some stage. So really, whilst this major point of demand here holds, then I do have some reservations. But watch out for this sort of price action. Something like this, it comes up, it tests, and we see a little bit of work around here. And I think it's a nice white candle close above that we can start to get involved, but not until then. Let us keep going. Let us go to SSM, which looks fine. Service streams flattening out, isn't it, Barry? I think I asked this one. I don't know, Barry. It's kind of getting to the point where you're saying, well, whilst my money's in this, it's not in some other stuff that is moving, and you almost, I think, managing a risk on the basis that there's on a relative basis, there's better stuff to do. So there's an opportunity cost issue, but there's nothing really terrible in the chart that suggests that supply is taking control. But it's very flat. We're at equilibrium, and typically, what happens when you think about anything in nature that reaches an equilibrium, it could go one way or the other, back into one state or the opposite state from equilibrium. So we could go up from here, we could go down, but there's too many coulds there for me. So I'll let you decide what your ratio is, whether it's sort of keeping a third just to have some skin in the game, it's not terrible, or keeping 2/3 and getting at a third. But I don't think we can work off a full risk position here much longer. I think we've given it enough time to do what it should have done, and maybe it hasn't. And if you keep a little bit of skin in the game, and it does actually move into the right state of equilibrium, at least you've got some skin in the game, but you're probably doing some other good stuff with the capital that you did take out of it, so it might not be so bad. Why so many whites seems range bound, says Barry. Yeah, absolutely. Why so many whites? It's just a very liquid stock. Often you get white candles like this when there's a programmed buy order, so somebody needs to buy some stock, and there's a bad market, whatever it is, the stock starts down of the day, just in line with regular selling, and then the programmed buy order works into the system. You want those. You want those programmed buy orders in the system, and that's why we love white candles. But it's also illiquid as well. There's just not a lot. I'm betting you there's not a lot of volume. If I go down here and you look up here, 122,000 shares is not a lot, and even on a half decent day, we're only up to 500,000 shares. My picture is good, but I'm in Perth, says Brett. I'm glad your picture is good, and I don't know why you're saying, but I'm in Perth, as in that's some sort of impediment to you. I'm in Perth too. I don't think that's an impediment. I'm down in Mandurah. Oh, okay. So you guys are talking amongst yourselves as to whether the picture's good or not, and somebody's in Mandurah, which is a little bit south of me. And it just goes to show it depends largely on where you are, how good your NBN connection is. And some people I know have got it really good, and some people don't. I'm so sorry. I'm in a good spot. I do have the right fibre FTTP, and it's 100 megabits upload and 40 up and 100 down. So it's a decent connection here. Russell 1000 index is looking good. I'll try and find that in another screen, Perry. Now, Perry, go check the Russell 3000 index. I looked at that today when I was in my US database, and I'm not even going to try and get there on Norgate today. But check out the Russell 3000. And can you do some homework for me and email me and tell me what is the difference between the Russell 2000 and the Russell 3000, so that the Russell 3000 looks so good and the Russell 2000 doesn't? That's homework. Let's have a look. They're US stocks, AS stocks. Thank you, Peter, for letting me know where you're operating. We're going to get to all the US stuff as well, don't worry. DUG, which still looks very good, no complaints. It's still a picture of demand. I can't see anything so sinister in there to tell me that supply is really exerting itself. In fact, demand is still, I think, very much in control. And until we see, this gave you a pretty decent shot across the bow. And if you knocked out a third there, I wouldn't have complained at all. I don't think these were enough to do it, anywhere near enough, but certainly that big black candle worries me. So if you're still holding a 2/3 position, I'd stick with that. Do you need to increase your position? Look, I don't mind. It's just very flat at the moment. I think we'll find better stuff than this, but happy to have some risk there and just be part of this trend, absolutely. Let us go to the next one, which is, I always pause here as I'm trying to find it, DDR. Dicker Data still looks okay. This was, when I had to do, when I was going for this job with Market Index. And I know Chris Conway, you probably know Chris Conway as well, he used to be on Marcus Today. Chris and I go way, way back because we worked together at Australian Stock Report, where I was his boss, and coincidentally now he's my boss. They sent me this thing. I had to pick a stock for them and write it up. And I picked Dicker Data, and I reckon it was literally on that day there. And it probably got me the job, because over the next couple of weeks it did pretty well. Maybe it was this day here, because it went up a lot. They said, "Oh wow, you're very good." What's it doing now? It's having some problems now. This would not be, if I was going for the interview now, I would not be using Dicker Data as my case study. because I don't like the price action. I think it is very clearly lower peaks and lower troughs, losing some momentum to the downside, and that's encouraging. And also today's candle was encouraging as well. Okay, so it's going to be, if I had to give it a score out of 10, it'd be like a 7 out of 10, because lots of other stuff are still very good. Don't get me wrong, that's fantastic. The short-term trend could be better. Candles could be better. Maybe it's a 6.5 out of 10. I mean, it's still holding this. That's very good. Today's candle is fine. I'm going to say that if I didn't see this candle today, I'd be advocating for less than a full risk position. But given that candle, if you're still a full risk position, I'd be happy to stay there. What I don't want to see, I draw a line in the sand here, and I don't want to see it close beneath that. So if we say close, and I'll give you a number. What number is that? That number, that low there, 11.23. So, and give it a little bit of room. Don't say, oh, well, it's 11.22. I have to get out. But it might be like close less than say 11.19 or something. Going below say 11.20, then I would minus 1/3 certainly. And because we've already got this, if you haven't already taken some action, because I don't think you should be full risk position now, then I'll go question mark. Well, should I really minus another third? Let's go minus another third, an extra third, extra third, question mark. Would I be buying it today? No, I wouldn't be buying it today, because we still have this major peak here to contend with, and I would just prefer to see a confirmation that demand has come back in. I think today's candle tells you demand's come back in, and actually some half decent volume as well. I think demand has come back in. We've removed some supply, but because I've got a major peak here, which is this thing here is a major peak, I would prefer, before I add risk, to see, it doesn't have to go all the way back up, but just anything that sort of resembles that. And then it might be the white candle in here that gets me, that I'm happy to go in on. Okay, so I'm hoping that makes sense. If it doesn't make sense, let me know. If you understand what I mean by it's the white candle that sort of appears after that trough is the one I'm looking at. And I need to go draw, and that's the one I want there. And now I can draw my trend line, and that's just a function of me having reset up on my new laptop this platform and forgetting to put it back in. So that's what I need to see there. That is Dicker Data. Let us go to FND, which doesn't ring a bell, but I like this chart. Now I'm going to suggest, because this wasn't in my shortlist today, but it would have made it. So there's something probably in my liquidity filter that has kicked this out. But this, for me, is a very, very clear-cut case of plus 1/3. Yeah, I like this one. And, I'm a sucker for big white candles, but it's also happening in the right place. It's happening at the short-term uptrend. We are seeing, actually, this is a great segue from the last one. We are seeing exactly that pattern I said you wanted to see on the last one before you got back in, which is just seeing a bit of this, right? With the right candle, and that's when we're adding some risk back in. But otherwise, everything still looks very, very good here. So a nice resumption of a short-term uptrend within a long-term uptrend with a wonderful, wonderful candle, and some decent volume. Certainly the biggest volume, biggest push we've had for a couple of months now. So we've removed a bunch of supply, and probably even a bunch of supply that might have just been lingering even from here. That's obviously the next key level, which we'll have to deal with, but I think we've got enough room before we get there in terms of reward to risk, so we don't have to worry about that. Okay, let's go to YAL for crackers, and this one, I sort of remember this had that flame out candle, didn't it, over here, which is not a good look. And today's candle, a bit 50-50. I mean, lower shadow is encouraging, but still a black candle close. Look, not terrible. If I had it, I think I could still be full risk position. I don't think, I don't like that candle. Let me look you in the eye and tell you, I don't like that candle. But today's candle is not enough of a confirmation for me to jump out because of it. If I saw a confirming candle today, even if that candle closed on its low, I'd be more concerned about it. But I am still really just waiting for the confirmation now to take some off the table. So that could be tomorrow, it could be the next day. And if we got it, we may not get it, I'd be inclined just to say, don't like that candle. That's not what I wanted. Don't like that candle, and it's been confirmed, just going to take some precautions here. So something like that, I would go, say, minus 1/3 on it. Again, this is just the way the model works. We're just saying, I'm respecting what the market's telling me, but I'm also respecting that the market doesn't tell me the truth all the time, and it might be up tomorrow because we've still got this sort of stuff going on. But that's good. That's good. This candle is good. Okay, but you can see there's a bit of supply. It's a bunch of pesky supply that's working into the system. We talked about those white candles equating to program buy orders, with these black candles that are equating to program sell orders. There is a big fund, a substantial fund manager, a substantial holder out there that is using this recent strength to sell into the strength. And they are combating, they are battling with other fund managers, which for whatever reasons are seeing value and think it's going much higher. And ladies and gentlemen, welcome to how the market works. And we've got a little bit of an issue here as well, okay? The way to keep me in this trade is just to keep printing white candles and lower shadows. Other than that, I think we're taking a precautionary measure, but it is only just a precautionary measure until it really then rolls over, and then we're taking more drastic measures. Let us say here, sorry, Carl, didn't look at your Twitter today. My top 4 ASX stocks mentioned above are actually on your list as well. Oh, okay. I didn't see your ASX ones. Oh, yeah, there you go. They are all on my list, and that is good. Great minds do think alike, Perry. Appreciate that. I'm happy to look at those. We'll get back to those in a sec. Chris has got EVN. That was, what was this about? There was also an announcement there. They had their trading update, didn't they? They had their quarterly production numbers, and they missed. And I will, so if we go back to what I might have said about the stock, I guarantee you this was a feature chart here. No doubt about it. It was a featured chart there. I don't think I've run it as a featured chart since. Correct me if I'm wrong. If I did, it might have been on that day, because that's when it would have looked good. But I would have probably not run it on that day, because I just feared the severity of that supply point. But in the interest of full disclosure, yeah, very recently I was saying pin your ears back and buy it. Okay, so what has happened? And again, I don't know the future. What was this day here? I mean, that was a huge gap as well. A capital raise. I don't know. And this is how stuff works in the mining sector. It is frustrating because they look good and then they announce something and we come down. But I think there were plenty of places you could have lightened the load. Let's say you got in here. Let's say this was your plus 1/3 based upon something I might have said. Okay. So let's run it as a bit of a case study. Is this candle here enough in itself to be minusing 1/3 the day after, even though the day after was all the way down here? And no, it's not. There's no way that candle, in my opinion, is enough to do anything but continue to hold. Now, this giant gap is a species-ending event unless it's a dividend, and I don't think it was, unless it's a dividend or some sort of special dividend or capital return. I'm pretty sure it wasn't. So this, for me, is the species-ending event where it'd be very unlikely I would hold anything after this candle here. So upon seeing that candle, really, I'm looking to exit in this candle here. If I was to hold 1/3 only on the basis that the long-term uptrend was held in this very bearish candle, and I say it's a bearish candle, you say, no, Carl, that candle's not bearish because it had a lower shadow. No. The candle actually starts up here. Okay, because there is a huge gap and you need to take the gap into account. You can't see gaps in candles, but you need to see the gaps in the candles. You need to sort of imagine them, that they're there. So this is actually a really bearish candle. And then, if you had 1/3, you're waiting for a close beneath here to get rid of it. And then it starts to look okay again. So you're probably thinking, okay, well, I've got 1/3 left. I'll see what happens with it. As I said, I probably wouldn't have wanted to add here. And then we're getting to the point probably here where we're saying, no, I've given this more than enough time, and that last 1/3 is out. So you would have been minus 2/3 here. I'm just telling you what I would have done. You can do anything you want. I'm showing you how, if I had this trade, exactly what I would do. And let us put that there. So on this day here, I'm minus 2/3, and I reckon, probably even before that, but let's say on that day there, I'm minus 1/3, and I'm all out. So no risk position from that point in time, and very relieved that I have no risk position now. And you might be saying, hey, Carl, mate, I didn't do any of that stuff. I just bought it because you said it looked like a good chart, you put it in your short list, and I just buy stuff. And when they go up, that's when I think about taking profits. Mate, when they go down, I just hold on to them. I hope that's nobody listening tonight. I suspect it might be some. But if you didn't do that sort of stuff and you've still got it, well, we just reset, don't we? We just pretend this is the first day we've ever looked at the chart, but we're starting from a risk position. What would I do? Well, this is another species ending event, right? That's not good. Hardly any, anything here to suggest that that supply is being combated, is being overwhelmed. So you would, I think this is very much a minus 2/3, damn it, minus 2/3 like that one was, and then we're taking it from there. Although what we don't have here, right, so we'll start off with that, but what we don't have here is the luxury that we had here of holding that long-term uptrend ribbon. We're just not. So you really then have to question whether minus 2/3 is enough, okay? Wonderful case study, wonderful case study. And I'm not trying to, chastise you for not doing the right thing. That's not what this is about, but just illustrating that if you haven't done the right thing, then today's the perfect day to start doing it. Let's zoom out to normal and say this is very, very sideways. I mean, it was a chart that has shown immense promise in recent times. Maybe I ran it in the shortlist here. I can't remember exactly. I don't think I've run it since then because the price action just hasn't been good enough. And for those very reasons, I can't see why you would have any risk position here, because the long-term trend is starting to turn over, isn't it? So I can see holding that plus 1/3 if we've got a nice long-term trend, but we don't have that. So I'm going to go zero risk position on this one, nil risk position on Capricorn Metals. And let's go for Chris's next one, A2 Milk. Oh, I'm really glad this has come up. This is a fascinating chart. I think this is going up. I think this has turned the corner. Maybe it's setting up for one of those aggressive trades. And really, I don't know if I'd chase it right now, but I think certainly if you want to, and when I mean aggressive, it's like this is breaking a lot of the rules sort of trade, but you're doing it on the basis that you saw a great big bloody white candle with some decent volume. That candle engulfed a few other ones. Maybe there's a short-term uptrend that's kind of helping you out. This one's, you'd have to really squint to call that aggressive. I think it's way too aggressive because we've still got lower peaks and lower troughs at that stage. So no, I wouldn't advocate for having a crack there. But I do see a case for having a crack. Oh, this one didn't quite get, I would have loved it to have broken that peak. It didn't quite get there, but it certainly got there with some confidence. So I think that's the earliest that I'd be comfortable going for what I have called in the past my aggressive setup. Okay, we've got three setups. We've got our trend following, very simple one, Wesfarmers. We've got our turnaround play, ASX, Elders, and we've got this one. I'll show you Zip in a second. We've got this one, which is, I think, more of an aggressive one. And you'd be making some money today. And I think you're just going to see how this goes. I'm not a buyer here today because we're not seeing that long-term downtrend turn around or even contract just yet. I'd prefer it to be amber. And I would love to see some price action in that long-term trend ribbon, some higher peaks in that ribbon, to tell me that it is starting to act as dynamic support. Okay, because up to this point, it's been very, very solid dynamic resistance, right? Supply. So I think it's an early one, but if you had it, for all the reasons we've talked about, the wonderful showing of demand there, I can see every reason to be running with a full risk position if you're already in there. I mentioned Zip as one which I have been putting in the shortlist a few times, and that's, again, more of a turnaround play, but still a very aggressive one, I think. And actually, the aggressive setup is here. Hopefully your eye just drawn straight to that candle, because that's a wonderful example of that aggressive setup, I think. And then ASX is sort of that more traditional. You can see, this is what I want to see here. See how it's moving above the long-term trend, comes back, tests it. Oh, wonderful, wonderful price action, wonderful candles now. And who would have thought ASX could be any good ever again? But A2 Milk, yeah, happy holder there. And PNV, this was shortlisted and actually ran it as a feature chart today, which was somewhat aggressive in that the price action is still lower peaks and lower troughs. But what we do have here, whilst it is lower peaks and lower troughs, we have taken out the point of supply. And with an almighty white candle, and whilst we're also holding now that long-term trend ribbon. The long-term trend ribbon has gone from a point of excess supply acting as resistance to now acting as demand, and the more points we have of it acting as demand, the more confident I would be for a turnaround play. So full risk position on that, and if it means anything, I ran it as a feature chart today in my ASX shortlist. Rebecca saying, hi Carl, you mentioned that you want to see those programmed buy orders, the fund managers buying. What are the signs which indicate that programmed buying has come to a close and it's time to move on to other opportunities? So the white candles is buying, and then if they start to turn into black candles, those orders have been filled. That demand that's out there, remember, demand is just cash. The cash has purchased shares, and there's more shares around for sale, and they are motivated with their pricing. So prices start to come down, creating those black candles. White candles, program buy orders. Black candles, the incidence potentially of programmed sell orders coming into the system. They did a capital raise to purchase the mine in Canada, says Chris, and that was Evolution, and then there was the third quarter update. Thank you for reminding me. I genuinely mean that because I was racking my brains. Because I do follow up my shortlists, and I do go, oh crap, I thought this looked really good, and then boom. But I can't see when a company's going to do a placement and issue a bunch of shares to take over something. I just cannot see that. I'm sorry. Okay, I'm at the bottom of that list, so I'm going to go back to the top of the list and work my way down and see if there's anything I missed. And I do want to do Perry's 4 stocks. These are Perry's ASX stocks this time. And we do have HLI, which has been on my shortlist so many times over the last few months, and you can see why. It is a picture of excess demand. I have no qualms about being full risk position here, and I can't see any reason not to add to it. That is, as long as you're not afraid of the big bad $5 round number. And that might be just enough of a reason to take my money that I'm looking to allocate and maybe go for something else that has a little bit more upside into that round number. But if I had it, I want to go find that round number. I want to hang on because we're sort of, we're almost in the vacuum that round number represents. Because think about it. If you've got this stock, you always have to think in terms of demand and supply. Always think about how the cash feels. Think about how the people with shares feel. And people with shares are going, I'm waiting for $5. I'm not. Why would I sell it at $4.69? What is the relevance of $4.69? I want $5. So I'm going to withhold my supply until I get $5. And when I wake up and I see it's $5, I'm going to call my broker and say, what a clever little boy or little girl I am. I bought it at $2.50 and I've doubled my money. I'm getting $5. So supply is withheld. We know there's demand in the system, and that's why we're getting to that round number. But then the supply comes in, and we might get some candles we don't like up there. But happy holder until then. Watch out for what happens at $5. Let's go to DTL, which is wonderful, wonderful, wonderful. Again, another one that's been a regular on my shortlist. No complaints, and $10. Probably say the same thing about $10 as to whether you'd be allocating capital now. I did run it as a feature chart because this is just a picture of demand. There's nothing I don't like about this, which means there's everything I do like about it, okay? But understand the further away you're going to get from a light green zone. Don't take my word for it. Just go and look at the light green zone a lot on a lot of different stocks, and you see the further away you get, the more likely you are to come back, mean revert, and then bounce off it again, okay? But happy holder, if you've got it. Hub, I think, is just a wonderful, wonderful chart, and it's not far away from light green zone, and it is a picture of demand. And, this is my favourite chart out of all the ones I've put out today, and you're going to go, oh shit, write this down, I'm going to go buy some tomorrow. I don't know what's going to happen next, but this is my favourite chart, and that's all those words are worth, okay? It's a picture of demand. These are the ones I like to own. But I like to own a mix. I want to have some of these, bottom left, top right, those continuation setups. I want to have some ASXs. They all move differently at different times. And I want to have a few little aggressive ones in there. And then I want to flip that thinking on its head and have a few shorts of the 3 types of setups as well, okay? But obviously if the market's going gangbusters, I'm going to allocate substantially more of my capital towards the long side than the short side. And I would suggest seriously, because the trends are as good as they are at the moment, you're kind of like an 85-15 or even a 90-10. That's how skewed you are to one side. Now, as the market starts to flatten out, you can start to change some of those ratios to give the shorts a little bit more of a go. But I don't think you want to have too many shorts out there just at this point in time. And the last one is CBA, which is another wonderful chart, magic chart. This might be my second favourite chart. And as you think about all the value investors out there right now, right? Looking, Perry, can you just imagine the befuddled looks on their faces, Perry? Can you just imagine them just literally just looking at this chart and just not getting it, because they've got the slider all around, they've got the protractor out, they worked it all out, and they said it's worth $90 a share or $80 a share based upon the dividend yield or its market share or some other stupid ratio that so other people care about, but I don't. And I just don't understand how it's there. But it is there, and who cares why? Now, that's all of the Aussie stocks done. Let us go to the US stocks. And I'm going to head over to here because I'm not going to bother trying to change the database. But it's all good. Let us hit up Jason. You've been very patient. ANET. Let's have a look. And we're going to go here to, well, we could go all, couldn't we? Nice. What a great looking chart. No complaints. Magic. I hope you're on it. It is getting a little bit of a ways away from the light green zone, but not a deal breaker in terms of do I add risk tonight. It's nowhere near around number 300 is sort of up there, but it's, even then threes aren't as important as twos and fours. I've got no complaints about owning this right now. Would I buy it? Hey, let's see what else is out there. Okay, it's the first one. Let's see if we can get to the point where we say, well, actually, this is probably the best one I've seen tonight. Like I said about CBA, and it's so good I've forgotten about it. Polynovo I did like. I like the big white candle. And hub. Okay, TRV, but I love it. It's fine. Let me just zoom out a little bit. It's looking even better. And let me go here and just double check there's nothing sinister. No, it's all blue sky. And aren't US stocks wonderful, everybody? If you're banging away on charts that look like ASX or Polynovo over here, this is where you just get the most amazing trends. And that's why we look around. Okay, let's go to TRV is the next one, which is Travelers Company. There you go. Oh, look at that. Look, it was a picture of excess demand before that big pop. I don't think you'll be adding risk after that big pop, just based on the candle. Obviously a little bit of indecision there, but not that much, because you factor in the gap. It's still a very high close on the day, but not quite enough for me to jump in just yet. But it is on alert, so we're just looking for really the next white candle, the next higher trough, preferably with a white candle, nice lower shadow, the next valid signal to add some risk here. And I love gaps. And I love gaps that are held. So maybe 2-3 a week's worth of candles just to see how well it holds that gap. And remember, it's so counterintuitive, because normally when things go up a whole heap, our first instinct as human beings, and that's fine, that's how it works most of the time, is to sell. But that natural instinct will do you a great disservice when it comes to trading, ladies and gentlemen. So you need to detune it out of your brain. I love that one, but I'm probably not going to run out and buy it tonight. And then we're going to go to CAMT, which is Camtek here, and just as good. I don't even care that last candle's black. Lower shadow, great trend, magic. I love all of these charts here. So I'd be happily adding risk to any of these. 1/3. The first one and the third one. The middle one I'm still waiting, but not far off. But they're all very, very strong trends. I really, really like them. And I like the price action as well, the candles. It's not just the double greens on the screen. So thank you for those, Jason. They are excellent. Let's do Perry's US thoughts now. We're going to go to DEC. DEC is outdoor, which Perry, I think, alerted us to last week. Looks great. No complaints. Happy holder. Adding risk plus 1/3 all over the place. No complaints. There's nothing in there to tell me that supply is going to come in anytime soon, not to say it won't. Let us do FTAI, which is a new one. I haven't seen this one. FTAI Aviation. and looks just as good. I know I'm a broken record here, so I won't spend too long on them. Wonderful trends, stairway to heaven, but here, this is how it works in the US. When their indices trend, when their stocks trend, they really do an amazing job of it. Let us go to NVDA, which is also came in offline as well. So I think Craig asked for this, if I'm not mistaken, and this is just a magic chart. Yeah, I haven't done these for a while, obviously. We just haven't had to cover it for a while. But you can see all the reasons not to be in it through here. You would have had so many minus 1/3 through here. And I think you're probably starting to look at it here. I think this is the key candle. That's, if I can get onto it. You know the one I'm trying to find. Oh, God, I had it. This is why I don't operate here, but I'm getting better at it. And this one here is also extremely important. And they are the two ones, I think, to drag me back into the long side on NVIDIA and holding. And I can't see anything but, really honestly, reaching a full risk position last night on that candle. So very, very happy with that one. And if you don't have it, I think I've made my thoughts clear on what you can do. It's getting a little bit of a ways away from the light green zone. But this is why we have this methodology where we're sort of taking that almost speculative earlier trade on the basis of that, that nice solid white candle at the zone, it's, higher little peak sort of throwing in there, higher little trough thrown in there, and trying to get that one in a little early. There's your confirmation. Now you're at 2/3, and then you're just waiting for the next white candle. You could have actually probably gone on that candle there. It's not too bad, or even that one there, or even that one there. To be fair, but I love it. Let's go to ALG for Adonis Alamo Group, which I really like this one too. And I know there's some supply lurking in the system, but I think we've soaked it up. But imagine what's the analogy I can use here? I mean, there's a bucket, it's got a hole in it, and supply is dripping out of that bucket. And I think we've run out of supply, and the sponge, there's a sponge under the bucket. I'm really struggling with this analogy, but it's soaked up that supply, and we're dry. I don't know, going back up. I think it looks fine. No, that's not fair. I think it looks better than fine. I like the little higher peaks, high troughs. It is a high peak as well. The point I'm trying to make here very poorly is like that NVIDIA setup I just talked about, where you're getting that little third in early and quickly, and then you might get another third here, and you might get another third on the break, and then you're well set by then. But yeah, look, I think this is a plus 1/3 for me, so let us officially go plus 1/3 on that one, and I've made the mistake of not doing the escape key. There we go. And that one was from Adonis. Thank you very much, Adonis. And CLDX is the next one. Celldex Therapeutics. Not as good. Not as good, but a wonderful one to have next, because we can see it's not as good. I mean, we had a wonderful candle, or two wonderful candles for me. So these are, that one there is your buy. I'm not sure if I would have bought the second one, just because we did sort of dip below here a little bit. But, if you said, hey, Carl, I bought the second one, I wouldn't complain too much. Okay, so we've got a couple of decent buys there. I'm pretty sure I can visual order bring to front. There you go. You know what I like in terms of price action, right? So I want to see the price action that is, and I'm pretty sure I can do it here, can't I? I can do the continuous path. There we go. So I want to see, there we go. TradingView's got everything I need, is what you're saying. I want to see this sort of price action where the last trough, so if we call this the last trough is at or above the second from last peak. Okay, typically we've got that compression there, so something's holding it back, and that something is excess supply. It's here, it's lurking, and as good as it looked, in fact, that's a wonderful candle there as well, isn't it? So the one I'm talking about is this one here. This one here is a particularly good candle. So I can see why you would have been all over this one, Adonis. And if you are in it, I still think it's a hold. We've got two little lower shadows here. We're holding the short-term uptrend, but I just don't think I'm running out to buy it, if that makes sense. I think we're having some skin in the game. And if you've got 3 plus 1/3, I think you're okay still, but I'd be watching for a close beneath, say here. We don't want to see it close beneath there, do we? Okay, for obvious reasons. That would indicate that the demand, and there is substantial demand at that level, we expect, we would say that that demand has been filled if we get beneath that level. Okay, so that is Adonis's couple done. Let us go to Wayne saying his picture quality is poor again. Anyone with the same issue? Maybe that was the Wayne's in Mandurah. There you go. SYBR. Oh, wonderful, wonderful trend there. No complaints. Looks magic. Candles are exemplary. I even love this last little candle last night. These two lower shadows here. What do exemplary candles look like? What's my definition? White. Little black one there, sure. But even this was a sell-off. This was a bad day. Turned out to be an amazing day. Lower shadows, no complaints. Plus 1/3 all over this one. Let me put it on the screen. I don't know if these will stay here next time. I just don't know if that's how this thing works. But yep, that's what I think about that one. That is for. I always lose my place. That is for CYBR. Who was that for? That was for Adonis as well. Okay, I've done your other two. EVR, main, all in the US. EVR. Let's try that one. Evercore. You know, it's a function of stuff is just looking very good at the moment in the US. So let us whip through these. I don't think I need to spend too long on them. Look at all those white candles, plus 1/3. Thank you, Adonis. You are doing amazing today. And then MAIN, Main Street Capital. Oh, this is almost by pick because of that big long lower shadow. And maybe, you know, we said, what was the first one? I can't remember what the first one was, but we said, oh, look, it's got a little bit of an upper shadow. Maybe we're not sure about it tonight. You know, let's do the whip around and see if we've found the best one today. And I think we've found many that are even better than that first one because this is like a coiled spring. This is at that light green zone right now. It's like a coiled spring. It's had that pullback, it's had that compression, and it's getting ready to go. So that is, again, another very high quality setup. Thank you, Adonis. Plenty to choose from. That's what's great about these sessions, okay, is that we're coming together and we're sharing these ideas. ARM for Jason. Holdings. Very good. If I have any criticism, it's just a little bit of a ways away from the light green zone, but it is the most minor of criticisms. It's very good. This is substantial supply here, though. And that would have concerned me, and I would have been cautious on entering. For example, I wouldn't have gone in here because of that supply, just the severity of those black candles. But we've taken it out. We've taken out the supply. So I've got no qualms at all going plus 1/3 on that one, plus 1/3 on that one. There we go. And let's keep moving here. Going to MCD, which is McDonald's. Get rid of that, MCD. McDonald's, again, very good. And look at that, it's closing above all of those major peaks also. So no complaints. Let me just flick out here, because I expect we probably will have something to contend with, and look, not in the recent past. And I won't go any further back because I don't think it's relevant. So I'm happy with that as well, plus 1/3. And I don't know, is it making you nervous that we're finding all of these plus 1/3s? I hope not. MRVL, Marvel Technology, magic. And you can see as well, there are several places here where you may have wanted to get involved. For example, that is just a wonderful candle. This is also a wonderful candle here, and this is a wonderful candle here. And any of those are plus 1/3 for me. And I can't say no to the one that's there as well, because it's just as good, but you are getting a little bit of a ways away from that light green zone compared to the other plus 1/3 that I've identified there. And you might say, hey Carl, why are you telling me those things in the future? I don't have a time machine, I can't go back. I'm just saying, I'm trying to tune your eye in and show you the candles you want to see in actual trends which occurred, so that the next time you see it on another actual trend, you know what to do. Okay, I'm pretty close, I reckon. These are all ASX ones. Here we go. Peter's got VGO, and we'll finish here, everybody. Don't put any new ones in. Broadcom, amazing, but it's been amazing for so long, and there's so many wonderful plus 1/3 there. But yes, look, no complaints here. Plus 1/3, if you can afford it, that is, because you're looking at $1,200 for one share, but you probably can do fractional shares on many of your platforms as well. Okay, so plus 1/3 there, no complaints at all. And then we're going to go GILD, which is Gilead Sciences. Not as happy with this one, and hopefully straight away, like you see, a bit of an upper shadow, but plenty of white candles. So like this is all great. This is all great here. Uptrend, long-term trend, it's all happening. That little shadow is a little bit of a concern for me, so it might not immediately get my plus 1/3 over so many of the ones we've seen, and then my eye goes zoom back to here, and we can see just how close we are to what is, let's face it, a major point of supply. So for this one, I'm not sure the reward to risk is there if we're getting in here. It doesn't mean it's a bad stock, doesn't mean it won't go up. It just means, well, we have to have a way to compare setups, because when there are so many setups, it is almost a relief to be able to kick some of those out and then focus, know how to focus on what to focus. And that, let's do Visa. And I want to do Microsoft as well, Perry, because Visa looks amazing. So no complaints here. Again, still very much that coiled spring, and just, again, shows you just how good things are in the US. And the Aussie market, actually didn't show you the Aussie market, but it's so topsy-turvy at the moment, the XJO. And yet here we are with just so much clarity. And isn't that refreshing to get away from the uncertainty here in Australia and, all of this stupidity that's happening when I go notifications and all the lithium bulls that keep sniping at me, telling me I don't know what I'm talking about. Isn't it wonderful to have the ability? What's Ronzo saying there? Have the ability to go here and just have clarity. And I appreciate everybody who sticks up for me on Twitter against all of those numpties. And I said I'd do Microsoft before we go, MSFT, because it is just another wonderful chart, a picture of excess demand. No complaints there. I haven't looked at some of these other ones for a little while, actually, but let's have a look at them now. Apple, look, not terrible at all. In fact, I wouldn't mind a little plus 130. It's a little bit cheeky and sneaky, but a great little gap and run there, as you can see at the end. And it's an early third, but thinking of bigger things here. So I don't mind that bouncing off the long-term uptrend. I'm pretty happy with that. AMZN is Amazon. Let's check that one out. Very good, no complaints. And we talked about, I can't see anything in the NASDAQ or the S&P 500 and tell me these trends are getting time soon. And when you're looking at these majors, not looking stretched at all, and if you listen to, again, some of the numpties that are on social media that are supposed to be experts, probably getting paid 3-4 times what I'm getting paid to manage funds, saying, everything's so expensive, it's too expensive, everything's overbought. Does that look overbought to you? That looks like coiled spring. What else can we do here? We've got a Goog. Like, these are all plus 1/3. These are all plus 1/3 for me. So again, you can bang around. We bang around here if we go XJO. We'll go ASX 200. Or why don't we just do this? Just to show the point here, make the point that this is what we're competing with, aren't we? Over here, the waste of time that this index is, right? The ASX 200. I think I made my point. And let us head back to here, because we are running up on time, and I'm going to remind you, I'm going to thank you for obviously attending tonight, but remind you that everything we've discussed tonight, all of those plus 1/3 and minus 1/3 are all up to you. And now if you do anything and you lose money, that's because you made that decision yourself. And I'm assuming you've made it knowing that everything we've discussed today is general in nature. It's not specific to you. I'm not telling you what to do. I'm telling you what I would do based upon my methodology. And my methodology doesn't change. I hope you see that. I'm not here. I'm not a spruiker. I've got no ulterior motives. It literally is, this is the way I do things, ladies and gentlemen, and it's up to you to do it your way as well. Trading is risky. You'll endure losses. Ultimately, it's you and not I who's responsible for everything you choose to do. But apart from that, obviously, it's been a pleasure hanging out with you today. There I am. I hope you enjoyed today's session. I very much did. If you are that way inclined, head over to Buy Me a Coffee. That's back open again. all the best for your trading and investing. Till we catch up again. Bye-bye for now.